The Rohingya Muslim crisis, the boat people in Southeast Asia. We've had a lot of the correspondents actually out in the field covering it, including our president, Jonathan Head, who hasn't had a change of clothing in 10 days, so I'm not sure we want to see him back anytime soon. And then later in June, we're looking at a possible program on the Chinese in Thailand, which is designed to coincide with the 40th anniversary of the normalization of relations between Thailand and China, which occurred just after the end of the Vietnam War in 1975. And so to this evening, can I invite my shy panelists to take their seats? I think you're all labelled. As I suppose everybody in the room is aware, a year ago today we had the declaration of martial law in Thailand, which everybody described as a coup de facto or a coup light, and of course within 2 days we found out what a real coup was about, so that's 2 days away. Now we're not going to be specifically analysing the performance of the government, although that's of interest, but we're taking a bigger look at where Thailand is now, where the economy is, what's happening and what's likely to happen next. And we're very, very lucky to have an exceptionally distinguished panel. We have Ulrich Zachau, who heads the World Bank in Thailand and covers the entire region. He's a German Rhodes Scholar from Oxford and previously worked with McKinsey & Co. and taught at the University of Bonn. From Thammasat Business School, we have Associate Professor Pavida Pananon, who spoke here last year, and she has a PhD from Reading. And her research focuses on the internationalization of firms, and she takes a particular interest in emerging market multinationals. She also sits on the boards of various specialist journals in the region. We have Atikrai Jeep Jatikavanit, who runs the Thonpo Fund, Thailand Fund, which is within his Bangkok-based investment firm, Hunters Investments. He started out in Padang, which is a very big company here which deals with zinc, and his introduction to the FCCT was when that was taken public, and went on to join JF Tanacom Securities, which was sold to JP Morgan, and he has quite a famous brother. And finally, we have Ian. Sorry, I've muddled up my notes now. Gisborne. Yeah. We have Ian Gisborne, who specialises in studying the changing nature of investors in Thailand and the importance of infrastructure. And he works with UBS and has a background with a number of big banks in the region, including Credit Suisse. So I thought we'd kick off, if I may, with Ulrich, who, if we could ask you to give us a sort of a big view from the top of the Thai economy and what you think is going on at the moment. Sound? It's all right. Microphone.
Okay.
Welcome.
Welcome. Good evening, and thanks very much, Dominic. Now I know the first quarter growth numbers just came out for the economy, 3%, and many of you might want to hear or talk about quarter by quarter numbers, or about the exchange rate and what the Bank of Thailand has been doing and various other things. I have fellow panelists who are much more eminently qualified to talk about those issues than I. So what I would like to do is to focus a little bit on the medium term, on the long term, and I'll group this in 3 parts. I'll talk about the first point, that it's all structural. So this boom versus bust, is it booming, is it not booming, busting, not busting, is all implies it's somehow cyclical. And my first point is it's not cyclical, forget it, it's structural. It's long term. The second one is I want to share with you that I think it's all about opportunities. It's about seizing opportunities and making them happen. And the third thing is I want to talk about people and about reducing inequality and making more equity happen. And so those are the three things. I want to talk about structure, I want to talk about opportunity, and I want to talk about people and equity. Let's start with structure. And I want to, under structure, I'll begin with 4 observations. The first one is, if you look at real GDP growth in Thailand, it was between 6 and 7% on average per year in the 80s until 1997. That's a long time, 6 or 7%. Now, then you take that period until today, the average was 4%. This year, we are projecting 3.5, other people are projecting different numbers. But the key point I want to make is this is a long-term trend decline. This is not an accident, it's not business cycle, it's not boom or bust, it's a long-term structural trend decline. Secondly, second observation, Thailand has been, and for a long time became and then has been the automotive assembly hub for Asia. Now, today, some companies are beginning to talk about moving their manufacturing elsewhere. And more than that, even some other companies are talking about not coming here, but going to competitors. So the past growth has been based on, if you will, assembly type manufacturing, essentially for exports, and on some shape of essentially consumption-fueled growth, some of it on credit. Now, neighbors and competitors are catching up, and they are moving up into that space. That's also a structural trend, and it's here to stay. It won't go away. Third point is, and I'm still this long-term structural trend, is about education. So Thailand spends about as much as OECD countries on education relative to its GDP per capita. So it's roughly comparable to OECD countries. But it has achieved increases in access to education, and that's great. So kids go to school. However, when you look at the OECD's performance assessment, they're called PISA, and there are 67 countries that undertake these assessments. 67, Thailand ranks number 50 of 67 in math. Vietnam, which has a much lower per capita income, ranks 17th. This is again not by accident. This is a long-term trend of investing in education in a different way from the way Thailand has invested. It won't go away, it will continue. Long-term structural trend. Fourth, demography. Thailand has had its demographic bulge, if you will. Thailand is about to get older as a country, population. Question, will Thailand turn gray before it gets rich? China is facing similar problems, other countries are facing similar problems. So here are 4 long-term structural trends. Listening to me right now, sounds pretty worrying. So it's time to talk about opportunities. And there's a famous British man, lived sometime in the past, some of you will recognize it, who said that, a pessimist sees difficulty in every opportunity, but an optimist sees an opportunity in every difficulty, and I'm an optimist, so I want to talk about opportunity. Then let's start by looking at some things that Thailand has actually been doing well. One of them is, if you look at the way that businesses can operate in Thailand, doing business, the World Bank Group has something called the Doing Business Indicators. Thailand ranks number 26 among 180 plus countries. So this is very good. And Thailand's business climate has been very good for businesses. And overall, we can all criticize some things. It can always be even better. Singapore is number 1, but quite frankly, 26 is pretty good, and it's pretty easy to do business in Thailand. Secondly, let's look at logistics. There's something called the Global Logistics Indicators, another indicator that measures how good is the logistics environment. Thailand ranks number 35. It's also very good globally and internationally. Thailand is losing some ground on logistics, especially relative to some other countries, including China and Malaysia, who have been undertaking very big infrastructure intermodal investments. And the fact that these investments have been lagging in Thailand is leading to the fact that Thailand is losing little ground on logistics. But fundamentally, Thailand is doing well on doing business and on logistics. Also telecoms, you can get access here as fast, as speedy as you can get in the United States or anywhere in the world, by and large. Now, opportunities. So these are some things Thailand is doing well and continues doing well. Opportunities. Thailand can do even better on businesses, on doing business environment. One of the ways is to make it easier through ASEAN, and Thailand can lead ASEAN if Thailand chooses to lead ASEAN in opening up skilled labor markets for skilled professionals, doctors, lawyers, accountants, architects, what have you. Now, there's often this argument, yeah, we are actually open, true, but you have to speak Thai to be, licensed as a doctor here. Now, why not let skilled professionals in and then have Thai skilled professionals also go elsewhere? This could be opened up in ASEAN. Mutual agreements have been, established among some countries in some areas, but by and large they are very limited. This is an area where much more can be done. There are lots of other areas, other people can talk about those, but here is an area as an opportunity to make progress, to make it even easier. Logistics, infrastructure investments. It's lagging. There's a major transport infrastructure investment program. There's one for water. These are good investments. They're badly needed. As long as those investments are done in a clean and competitive way, and they are properly undertaken with good quality, they will help. They will help the Thai economy for decades to come. So these are investments that deserve financing, they deserve to be undertaken, and they're important. In particular, things like road investments between Bangkok and the Northeast, so that everybody there can take their goods and bring their goods to market more quickly. Third one, telecoms. I just said it's very good here, but it's not equally good elsewhere in the country. So Thailand could build a 3G backbone that actually gives access to everybody in the country, across the whole country. Next one, energy efficiency. Huge scope for improvements in energy efficiency. Just two things, the Bangkok Municipal Administration, the authorities, they're interested in doing that. Bangkok can come together, Thailand can come together and improve energy efficiency. It has to do with zoning and spatial planning and housing, also has to do with air conditioning, it has to do with the way urban transport is organized. These are things that can be done that other countries have been doing, and by the way, they also generate jobs and they generate economic growth on top of it. Many of you may have heard of this company Tesla, and they have basically made a huge business out of this. And then in the sort of process of doing that, they're just building the biggest battery plant ever in Texas. And this basically, it's a battery plant to provide very energy efficient batteries. And it's an amazing thing. Could Thailand welcome Tesla? Could Thailand, even better, create its own Tesla? Why not? There is this opportunity. Thailand has the human capital. Thailand can do that. But it requires determination. It requires policies that actually foster this. It makes it easy for businesses to do these things. So, so these are some opportunities. Now the last point on people and equity. We're the World Bank. The World Bank is about reducing poverty in the world and about creating an environment where everybody can participate, everybody can share in the benefits of economic growth. Reducing poverty, boosting shared prosperity is this slogan, if you will, the motto. So there's lots of stuff to talk about. I want to just talk about two things. I want to talk about education and I want to talk about taxation. And I'll start with taxation. In most developed, if not all developed countries in the world, taxation is the single most important way to create equity and help everybody participate in the fruits of economic growth. Taxation means that rich people, effective taxation means that rich people pay more taxes, not just in nominal terms, but in proportionate terms than poor people. So that means that equity is created because the government gets revenues, and then those revenues have to be spent on effective programs that help support the poor, that are targeted to poorer people. And those programs, and that's my link to education, and I'll come to that in a second, those have to do with improving education for everybody in Thailand, not just for the people who live in this beautiful city, Bangkok. And it has to do with giving good, comprehensive healthcare services which exist on paper for everybody and in practice for many, but really giving them to everybody. And Thailand has been very good on health, hasn't been as good on education, but has been very good on health. Still more progress can be made. Then you look at things like social security and social benefits, and they are not sufficiently strong and not sufficiently targeted. So these are ways in which equity can create it, but you can only do that if you are taxing people and if you're taxing people efficiently. This government, as previous governments also, has tried to undertake and is still in the process of undertaking, promoting, pushing, advocating, trying to advance tax reform. A whole slew of different tax reforms, inheritance taxes, real estate taxes, VAT, what have you. And it serves to earn revenues, and the revenues are meant to be spent on programs. But in addition to the actual reforms, it's also important to implement these tax reforms. And that's very tough, especially when you get political pressure, headwind from vested interest group lobbies who don't want to be taxed, and who have contacts and use all their financial and other clout to influence the government to prevent them from passing and implementing these tax reforms. And the proof of the pudding will be in the eating. So there's a lot of good intention, there's opportunity, but this is a way to get equity. This is a way to make sure that everybody benefits. Most of all in education. In Bangkok, the education standards are as good as in the United States. In the rest of the country, they are not. They are poor. And a lot of that has to do with the fact that in many countries, in many provinces, in many parts outside Bangkok, there are small schools, and the small schools don't have enough teachers and good enough teachers. They don't have critical mass to attract good teachers. And so what this large part of the reform will be about is putting good teachers into schools, not just in Bangkok, but elsewhere in the country. And that requires reorganizing schools and making it attractive for teachers to go there and paying them enough so that they go there. But it's not about spending more in total. As I mentioned, Thailand is already spending enough on education. It's the question of how that money is spent. And my last point, and I'll close with that, is, Dominic, you opened with this reminder that 1 year ago there was an event and you reminded us of politics. You will have noticed that so far I haven't talked about politics. because we are the World Bank and we really care about development, and development can happen with any form of government and irrespective of politics, because the key is whatever government is in power, can the right policies be adopted? I believe they can, but what's important is that that political environment is such that opportunities for bad policies get eliminated and opportunities for good policies are seized and taken care of and nurtured, sought after, and taken up. Carpe diem, and don't let vested interest groups get after you, and that also means fighting corruption. And I said before, in the words of Winston Churchill, that I'm an optimist. I am. And I also believe in the power of the Thai people to seize these opportunities. Do you? Thanks.
Right, just before we go to the next speaker, can somebody make sure that we have a microphone positioned in the middle of the room for audience questions when the time comes, and also be ready to do the visuals in a minute. So now we're going to go over to Jeep, and Ulrich mentioned that investors have more choices these days when they're coming to Southeast Asia. So Jeep's going to give us a rundown on investment opportunities in Thailand over the past decade and what is going on at this moment in time. Jeep.
Okay. Good evening. Thanks, Dominic, for the kind intro. My pitch is going to be slightly different than Ulrich, and it is probably going to be more geared towards private investing. Prior to starting up the Tonpo Fund, I was a stockbroker for over 10 years. And when the firm I worked for with my brother was sold to JP Morgan, I used the capital to go into my own business. I have to admit that prior to launching the fund, while we were mulling it with my then partner, the topic of the state of the economy, whether it was good, bad, or indifferent, did not once cross our minds. We were focused mainly on finding compelling investment opportunities that we thought was abundant at the time in a market that was largely overlooked by the global investment community, asset allocators. This was 2005, a few years after the Great Asian Financial Crisis. After Thailand has repaid its IMF loans, the corporates rebuilt their damaged balance sheet as a result of the crisis. We found ourselves to enter into a new world order where investors has preoccupied more with bigger, sexier markets, the likes of Brazil, Russia, India, and China, collectively known as BRICS. These markets is known to suck in 80% of the allocated capital to emerging markets during the past 10, 15 years. So there were compelling opportunities regardless of whether the economy was in a soft patch or whether the market was overlooked, and that's what we concentrated on. Perhaps we should have dwelled on the topic of the state of the economy, but I think if we spend too much time doing that, we might have not started the fund, let alone investing, and that would have been a complete disaster for ourselves and for our investors, because to have not started in 2005 it would have meant that we would miss out on one of the most fantastic asset performance anywhere in the world. It's hard to believe that the lost decade that's for Thailand that started in 2005 to 2015, at least politically, has resulted in the stock exchange of Thailand generating a dollar-adjusted annualized return of 12% during that time frame. It's hard to believe. To put it in context, the S&P 500 returned less than half of that, 5%. Just a little bit of bragging. Our fund did slightly better. We returned 20% a year during that time. So, we don't dwell on as an investor. Our mantra is research-driven stock picking. Okay, so we ignore the ebbs and flows of the economy. And I think all great long-term investors do the same. I'm not saying I'm great, although I'm very good at what I do. I don't qualify myself as great yet. And we just look for opportunities. We look for companies that can generate sustainable cash flow, can grow their profits in a sustainable manner, and entry price is reasonable, and that's all we look at. Whether the state of the economy is good or bad or indifferent, one thing is for certain, that it's never static. It's always evolving. And the Thai economy has definitely evolved from 10 years ago to today. 10 years ago, the landscape was pretty much about the emergence of the strong middle class. It got delayed a little bit by the Asian financial crisis. But by the year 2000, it came along, it was in full stream. This is a result borne by the very successful private sector growing the export industry. Export accounted for, at one time, almost 80% of Thai GDP. So the trickle-down effect to the people who worked in those industries is immense, particularly in Bangkok. So what we did as an investor, we just basically look for industries that is going to grow and tap into this growth in the middle class. But it's healthcare, we saw that come, property development, and so on and so forth. 10 years on, clearly the landscape has shifted a little bit. Those themes have largely played out. Okay, but as the economy evolves, new opportunities also evolve. Now we're talking about a class of people who are the consumer class. They're not yet middle class, but they're a rapidly growing consumer class. This is not just within the provinces or upcountry of Thailand, but also it covers down neighboring countries, the so-called CLMV, or the Greater Mekong sub-region. And hence, that's a new set of opportunities that I don't think is quite caught on yet by the international investment community. It's huge. Burma opening up, Myanmar, I beg your pardon, opening up is the last jigsaw on the puzzle. That it makes this Greater Mekong sub-region probably one of the most, in my mind, exciting investment opportunity you can find anywhere in the world. You're talking about 200 million new additional people waiting to join the new consumer class. GDP per capita of Thailand is just under $6,000. For the rest of the region, it's below 2,000. And by looking at Thailand before and applying what lessons we've learned in Thailand to these neighboring countries, it offers us a degree of predictability. We know what's going to happen. Vietnam may be 15, 20 years behind Thailand now, but I'm sure they're not going to take 20 years to catch up. They're going to catch up. The consumers and the consuming class wants what Thais have now. Regardless whether Thailand is a mid-income trap or not, they don't care. They want to be here, and they're going to get here. So the landscape for us has expanded beyond just domestic Thai consumption stories, Thai opportunities, and has now embraced our neighboring countries. And our mandate is very simple. We go out and look for companies and businesses that is looking to grow substantially their revenue, their profitability by expanding into these markets.
That's it.
That's it.
Okay. We'll come back to some of those issues. Pavida, it's going to give us an overview of the medium and longer term prospects for the Thai economy and the implications for key strategic issues such as international expansion, diversification. Wow. Is it working?
I hope so. Good evening, everyone, and thank you, Dominic, for organizing this. And he said that we would take 10 minutes each to open up in our discussion. So I try to stick to that 10 minutes by asking 3 questions. Oops, it's not working. So let me sort out with PowerPoint. Can anyone help me with PowerPoint?
Quickly.
I want to ask three questions. The first question is I want to evaluate how we are doing in the state of economy. I know Kunjeep said that we should not be looking at the state of economy and consider short-term, long-term.
Well, I'm not an economist.
And then I'm not either. And Ulrich said that he is an optimist, and I am I hate to say I'm a pessimist. I'm not just a half empty kind of person. I'm half empty and leaking. You know, so it's so my view of the Thai economy at this moment might not be too prosperous, but I try to be optimistic. After meeting you 2 days ago, I think that I should try to be more optimistic. And now I'm trying to be optimistic and hope that the PowerPoint would work. But if not, that's okay. I try to do without. First question, evaluation of short-term, long-term, and medium-term. I think short-term, we all hear the stories that it's not very optimistic to hear. Government spending is not very good. Consumer confidence is not good. The only thing good is perhaps the number of Chinese tourist arrival that is growing every day. Although we don't want to count that European tourists who are spending more are reducing in number. But we say, okay, if we head count tourist arrival, that's something that Thai people are happy about. Okay, so perhaps in the short and medium term, it's not too much to look forward to. But I think in the light of the difficult situation that Thailand is facing, I still think that for somehow Thailand will muddle through somehow. Not because we are the perfect Teflon economy or something, but I think that we would benefit from a few things. I think first of all, we will benefit from our geography. The location that we are located in the middle of mainland Southeast Asia, that would be one key benefit that would help Thailand to benefit from logistical linkage with the key market that Kunjeep has already mentioned, the CLMV and Southeast Asia. So those things would be a kind of a momentum that could carry the Thai economy forward. Because if anyone wants to expand the business opportunities in the region, you cannot overlook Thailand for its geographical situation. And that is one big advantage that even we Thai people cannot take away from ourselves, despite how hard we try. So, sometimes I tell my students that I hate to think that Thailand would go down in history as the country that most successfully shoot ourselves in the foot. But I hope not that I'm wrong. Okay, I hope I'm wrong on that. How are we doing with PowerPoint? Okay, so take some time to bring up the PowerPoint. My PowerPoint is not that interesting, but I have some tables that I think would be kind of interesting to look at the long-term trend, because I brought some index that Ulrich hasn't mentioned because it's done from a different organization. I would show the Global Competitiveness Index done by World Economic Forum. And I have some figures that look at Thailand all the way from 2006 until today, and see how we are doing with different aspects. And so that will confirm my point that over the long term, I'm worried about the future of the Thai economy in the long term. And the reason that I'm worried is also something that Ulrich has already mentioned. That is the structural structure of Thai economy needs to be take a serious look at all our major part of the economy. Our export is losing competitiveness. This first quarter of 2015, our export again is not doing very well. But on the same day that we announced our decline in export, Singapore announced that its export has surged for the record 18% in the same quarter. So that's a major question that I think we should be asking ourselves. How come two countries within the same region pretty much engage in similar industry of electronics and automotive, and Singapore is also a major exporter of electronic as well. How come Singapore is enjoying 18 growth export, whereas Thailand is losing competitiveness in its export? And I want to show that a little bit for its long term. Okay. Your computer takes a long time to start.
It's terrible.
But
This is a media organisation, so nobody works.
okay, that's one of the infrastructural issues that we need to talk about. Okay, so I think I pretty much finished my first question on evaluation and already took up 5 minutes on waiting for PowerPoint, and also trying to talk to you about my evaluation of the medium term and the long term. So again, medium term muddling through, long term worrisome. If you cannot get my point very clearly, I base my talk today also on the article that I would have in the Nikkei Asian Review that should appear tomorrow. So you can read that. This is a little bit of advertising, but that's okay. We deserve to do a little bit of self-promotion. Sorry. If you can see this, thank you very much for your help. Global Competitiveness Index from this is for this year. But what I want to show in here is I want to compare Thailand with its neighboring countries. And the number in red is the one that we should be worried. And the number in green, we are doing somewhat okay. So if you look at this, this index is based on Michael Porter, one of the famous business school, Harvard Business School professor, who looks at economy and say that economy goes through stages, and you need different things at different stage of economic growth. When you first grow from agrarian industry, you might just need some kind of basic requirements such as education and good market efficiency. But when an economy has joined the middle income ranking and the economy tries to be more productivity driven or innovation driven, then it needs more sophisticated factors such as business sophistication or innovation. And when you look at this, you can see that comparing Thailand to countries like Vietnam, we are still doing pretty okay. We're 84 and Vietnam is 92. Okay, we don't want to look at Singapore because that would make us all very depressed and pessimistic, because Singapore all rank in the single digit, and this is a ranking of about 127 countries. So, but when you look at Vietnam, okay, we're not doing that much worse, but we should not be comparing ourselves with Vietnam. We should be comparing ourselves with country like Malaysia, which is doing a lot better. So if you're not very depressed yet in this slide, let's look at this slide. Okay, it's small, but I explain. Just look at the red numbers. These are some of the key pillars for economic development of countries. And if you look from the year 2006 all the way to 2014, you can see that for issues like institution, Thailand has dropped from the number 40 all the way to 84 within a period of 10 years. So that means our institution has not been very competitive, and it has been dropping its competitiveness over 10 years. And if you look at other things, that would be quite worrisome. If you look at this, for example, the 9th pillar, technological readiness, we dropped from number 44 all the way to 65 in 10 years. So this number, the red one, it shows the kind of the key institution that Thailand has not been able to manage very well over 10 years. And let me show you what are some of these red. The first one is institution. This one is infrastructure. This one is labor market efficiency. We dropped from 11 all the way to 66. So it does explain why we are now facing problem with human trafficking and illegal labor and all that. So this slide doesn't look very prosperous for Thailand. And it also brings me to my second question, which I know that you don't want to address directly, but we know that the elephant is in the room, and we want to ask if the kind of the government that we have today has something to do with this. And my answer is yes and no. Because if you look at the trend over 10 years, I would say no. Every government has been a part of this major structural problem that Thailand has had. But if you look at the current government and the kind of the priority that they have, it's not very much the kind of the long-term economic growth and prosperity that sits in their mind at the moment, but it's more political security and more of what to do with the election and all those things. So it's very much a short-term and intermediate-term issue. So for them to be sitting and looking at all this trend and thinking of the long-term economic prosperity, I don't think that's their priority. And that's why I think that is this kind of government would hinder the prospect of Thai economy? Perhaps yes, on that aspect. And to move on to my next slide, this is also to confirm my previous point of when we compare ourselves to the neighbors. Sometimes I think one of the problems for Thailand is that we tend to look too much inside, and we just look at Thailand and say that, oh, you foreign correspondent, you would never understand Thailand because you're not from Thailand. We look very much inside. So when we don't try to look outside, and that's why we get caught in our domestic problem. But when you look at outside and the comparison, it's kind of shocking in a way. This is the overall trend of export, and I select 3 countries, which are basically 3 major countries that are involved heavily in the global value chain of electronic industry and have electronic as one of the key export. Malaysia, Thailand, and Singapore. Thailand is represented here in green and Singapore is in red. As you can see here, the amount and the trend that Singapore is experiencing is not the same that Thailand is experiencing. Whereas we are flat on our export, Singapore is actually doing quite well. So when Thailand says that our export is facing problem because of global slump in demands, that doesn't explain the export in Singapore. And if you look at this, it even shows that these are the different colors that show different kind of export for the 3 countries. If you look at Singapore, the blue one is integrated circuit and electronic components. The pink one is agriculture, red is automotive, and green is food. As you can see from this picture, that Singapore is involved in a lot more value-added export. That is one reason that its export can be sustained, and it's actually growing export, whereas Thailand's export is flattening, and partly because we are dealing very much with the kind of low value-added export in commodities and in low value-added products. So that's now I go to my next 3rd point. What's the implication on business? And because I'm from the Thammasat Business School, I think we should also be looking at what kind of scenario we will be seeing in the future for business. And I think I want to divide my talk into 2 things, and now I'm a bit more positive on the possibilities, and because I think I agree with Ulrich that Thai business is quite competitive. But if you look in the domestic market, one thing that I'm concerned for the near future is that we would see the big business benefiting more than the SME. And we already see 2 major big business announcing their interest in the infrastructure. That's the CP Group and the Thai Bev Group wanting to invest in the high-speed train. And that's something that it will call to mind of the kind of conglomerate diversification that Thai business experienced when we discover gas in the Gulf of Thailand, when Thai business just go after opportunity that are arising in the domestic market. And I am concerned that that might be the case that we would see with the kind of heavy infrastructural investment that we are going to see in the next 3 to 5 years. And why would that happen? First of all, because better financing opportunities. Big business obviously would get more funding from the capital market as well as from banks. Companies like CP are known all over the world, so it's not their problem to get financing from people who are willing to finance them. But and also because this kind of business, the kind of government investment and infrastructural investment, is unlikely to be completely open. We would probably see some kind of licensing agreement for people to come in, only a few people. So this is not completely free market. So what that might lead to is that it might allow the firms that are able to seize the opportunities more than other firms to prosper in this kind of environment. And I think that would not be something that we would like to see if we want to see all the SME also being competitive in this region. And that's one point. And the second point that I think would be also some nice future to look at is that with all the difficulty at home, I think we would start to see Thai business expanding more abroad, because we would see opportunities in CLMV countries and other area. And you can see from this graph that this is the trend that perhaps you might not expect. The blue one is inflow of inward foreign direct investment, and the red one is outflow of Thai investment abroad. So for the first time in history in the year about 2011, that Thai outward investment surged beyond inward investment. What this means is that Thailand is now not only a recipient of inward investment, but we are also investor in other countries. So with this, it reflects the level of competitiveness that perhaps Thai firms are showing in the region. And that means that if Thai business see that perhaps the domestic market would not offer the kind of return that Kunjeep can promise you to 20% return, and Thai firms might be starting to look for overseas opportunities. And I think that's good for them, because first, it allows more growth area, and second, I think they have to be more competitive when they go and compete with other people in other countries. And this is just to show you some of the key major Thai multinationals that have already gone abroad. And you can notice that two key sectors that we see a lot. One is resource and energy, and this is represented by Banpu, PTTEP, and ECO. And another group that we see a lot of investment outside of Thailand is obviously agribusiness and food. And this is represented by CPF, which is the major food subsidiary of the CP group. And we also see the role of TUF. But when you look at these firms, these are all major big Thai corporates. So what we see now is, I'm afraid that the Thai big business would be able to survive and thrive more in the global and regional competition. What we need to be more concerned is how SME are doing. And my concern is not that we should be helping them with cheap loans and all that, but I think that what we need to look at from the business perspective as well is to look at how we can make more Thai firms become competitive, and then they can join the flow of looking for opportunities themselves without having to rely on the government. Thank you for your attention.
I thought that was very uplifting.
Ian, are you going to play?
Someone to do
I know.
this, because I turned it off without knowing what I pressed.
Ah, the truth emerges. So Ian Gisborne, we've actually had this MCLV come up about 10 times already. This is the man that invented the term. Is that true, Ian?
I'm not listening.
Anyway, he's busy, but he's going to talk about the changing nature of investors in Thailand and have a look at the importance of infrastructure spending, which, as we're now finding out, has been neglected since about 2003. So there's a big catch-up game on the way. Is it working here? Can we have help?
Otherwise we might be here a long time.
Yes. This laptop will be executed after.
I think he's getting help.
Program.
Is this mine now?
No, that's Ian's. I wouldn't touch that.
I can pass it over to him. This is yours. Okay. Well, look, while we're trying to get the slides up, I should end up at the beginning that I'm also quite optimistic. I'm in the optimistic camp as well. And I hope it's not just because I'm a broker. So I apologize for that in advance if it is. I didn't want to repeat what everyone's already said. So I thought I'd talk about something slightly different. I thought I'd talk about what our clients are doing and what they're saying, and maybe that might be different and hopefully interesting for you.
Right.
The first slide is to highlight the fact that, firstly, who our clients are has changed dramatically in the past 5 years. 5 years ago, local institutions were 8% of UBS's Thai business. Today, they're 28% of UBS's Thai business. If you look at that top right-hand chart, if you look at the cumulative net buying and selling of Thai equities by local institutions, it's approximately 200 billion baht in the last 3 years. We have never seen that before, ever. Now I think there's two factors behind that. Partly there's a cyclical factor, which I'll talk about in a moment. I also think there's a structural factor. And the structural factor relates to that bottom right-hand chart. It's the fact that when you look at the weighting in equities of Thai institutions, it is extremely low. Thailand's single largest institution is the Social Security Fund. It has about 1.2 trillion baht under management. It has 90% of its money is invested in bonds. So if interest rates turn, they're going to have a very, very difficult time indeed. If you were to compare that, let's say, for example, with somebody like Employers Provident Fund in Malaysia, which is a roughly similar comparable institution, they have something like 35% of their investments in equities compared to 9% for the Social Security Fund. It means that what we're actually seeing for the first time in the past couple of years is some kind of natural local institutional demand in the Thai equity market, which we've never seen before. That matters because it gives you some kind of floor in terms of equity valuations, and you saw that last year. Last year, if you look at the top left-hand chart, foreign investors were selling. And they weren't just selling, they were selling in a size, again, which is unprecedented. So if you were to go back over the past 3 years, foreign institutions have sold more than 250 billion baht worth of Thai shares. Even during the global financial crisis and the Asian financial crisis, we have never seen foreign selling of that magnitude at any point. And in fact, at the moment, foreign ownership of Thai equities is as low, if you look at the percentage of shares outstanding, as it's been at any point in the past 25 years. What's been supporting this market this year, and it was all through last year, is what local institutions are doing. Now, first point, why were foreign investors selling? Well, the simple answer is actually they saw better value elsewhere, being frank. Partly because Thailand had done relatively well, which I'll show you a chart in a moment. And also in large part because other countries had not done well. It means that when you look at Thailand's earnings for the publicly traded companies relative to their peers elsewhere in Asia, Thailand got very expensive. Similarly, if you look at Thailand relative to the net asset value of listed companies relative to what you see elsewhere in Asia, Thailand had also got extremely expensive. In fact, at one point, relative to net asset value, we were 2 standard deviations above the mean. Something we've not seen for a long time. A couple of things have happened recently. In the past 12 months, Thailand has broadly traded sideways. Roughly, we're roughly about where the index was at the Q at the, last year. The second and more important thing that's happened is China is re-rated. China has roughly doubled in the past 12 months. Mid and small cap stocks in China have risen 200 or 300% in the past 12 months. What that means is when you look at Thailand relative to Asia as a whole on a weighted basis, it's actually now coming back into what would be a more normal range. In fact, if you were to exclude the period during the global financial crisis of 08 and 09, Thailand is actually already back in terms of its mean valuations relative to net asset values against the region as a whole. So we're starting to see in our clients is people who've not really been interested in Thailand for a long time are now starting to say, you know, which are the companies that are really cheap? Which are the companies where people have literally given up on? and where can we see some kind of inflection point in terms of earnings. But the point is that imperative to sell because of extreme valuation by foreign investors is reducing, and reducing relatively quickly. Why did local investors not sell the market last year? In fact, why did the local investors, as I showed you, buy the market in unprecedented size last year? If you look at that chart, the kind of slightly, hopefully brown colored line, that shows the yield on Thai 10-year bonds. The single most important thing that happened last year for equities, which I appreciate is a very narrow, very surreal world, but the single most important thing last year that happened to equities was not the coup. That was actually the least important thing that happened. It was the collapse in interest rates. Thai 10-year bond yields fell about a couple of weeks ago to the lowest level again I can find in a very long time. Thai 10-year bonds were yielding about 2.7%. You can buy any number of equities in Thailand today which are yielding you 4 or 5%. Across the whole portfolio of all the companies that we cover, the average yield is 3.8%. So basically, you're in terms of, if you think about what you're paying for in a growth perspective, you're actually, Thai equities, the price you're paying today is reflecting not just the fact that the earnings are not going to grow relative to bonds. Thai equities are telling you that earnings are going to contract and keep contracting relative to other asset classes. And as a result, why local investors have supported the market, and I think they're right to do so. Now that also presents a danger, and the danger is at some point the cycle for rates is going to turn. And typically when rates turn, equities will actually go down. The danger is, again, that we get that inflection point some point towards the end of this year or going into next year, and the rate cycle turns. The only way you're going to mitigate that danger from an equity perspective is growth. If earnings can grow sufficient to outpace any appreciation in interest rates, then equities can continue to do well. If you do not get growth and rates turn, then equities are not going to do well. I'll come back to that point in a moment. To stress my point about politics and its lack of relevance for equities last year, here we show you a relatively long, a 30-year chart of the FCCT index. One of the things you take away from this chart is that Thailand doesn't do boring. Thailand very rarely goes sideways. You're either making a lot of money or losing a lot of money, and you tend to do it very quickly. So if there's any market where the phrase "not for widows and orphans" is true, then this is definitely one of them. But the other thing we tried to do with this chart is we tried to adding on kind of comments in terms of some of the political events that have happened over the past 30 years to show how they've had relatively little impact in terms of equity performance. To go back to Jeep's point earlier, the past 10 years has been reflected in the most incredible series of political events and almost constant change of prime ministers and transport ministers and finance ministers and policy and pretty much everything else to make sure that you had no idea what was going to happen next. And yet, despite that, equities have done extremely well, and in fact, it's been one of the strongest periods of performance for equities we've ever seen. Why? Because politics did not matter for growth. They're irrelevant, because the growth in Thailand post-97 was predominantly driven by FDI and exports. And unless the red shirts and yellow shirts were going to move their base of operations from central Bangkok to Rayong, we were fine. If they'd ever done that, we'd have real problems. Thailand was relatively resilient. Now, that being said, again, the past is no guarantee of the future. It doesn't mean that that continues to be the case. And I think a lot of the comments the panelists have made is absolutely legitimate about Thailand faces structural challenges. And we can't rely on the same engines of growth over the next 10 years that we relied on for the past 10 years. It's not obvious where the next huge industry relocation to Thailand is coming from. We had the automotive relocation over the past 20 years. It's not immediately obvious where the next one's going to come from. 2, we are clearly facing rising competition from neighboring countries, not least of which Indonesia, Vietnam and the Philippines, which are going to be real challenges for FDI. And already in Japan, whereas 5 or 10 years ago they talked about a China plus one strategy, now they talk about a Thailand plus one strategy. So FDI is going to be shared amongst the countries in ASEAN almost certainly, So the question is, where's the growth going to come from? Well, again, it touches on a point the other speakers have referred to already in terms of infrastructure. We have an opportunity, by the sheer luck of geography, by just literally being where we are, to actually be quite an important piece in China's vision for the next 50 years. And we shouldn't kid ourselves that this doesn't all go back to China, because ultimately I suspect it does. But because we're situated at the heart of ASEAN, and because of China's desire at the moment to boost its own connectivity with the rest of the world, I think that there is an opportunity to invest in infrastructure that we so badly need. I think to a degree there's evidence that the current government is grasping that opportunity, and the action plan they released at the end of March is certainly the most detailed action plan for implementing on infrastructure we'd ever seen. And this is just the highlights of the immediate projects they've highlighted. The immediate projects represent about 850 billion baht worth of spending through to 2022 out of a total program of 1.9 trillion. And if you factor in some of the high-speed rail projects and expansions to airports and what have you, you can actually get up to closer to 3 trillion baht worth of spending. But just these projects alone, the government is forecasting expenditure to rise from 56 billion baht this year to an average of approximately 200 billion baht for 2016 to 2018. That represents something in the order of about 1.7% per annum of GDP today. Now, if they get anywhere close to that, it's going to provide a major direct stimulus to the economy, and then on top of that, we believe there'll be all the indirect stimulus from private developers, urbanization, and boosted productivity that comes from that. However, they have to deliver. And therefore, in that context, last point I'll make, bring it back to maybe politics and where we started, what we desperately need is policy continuity. Everyone will have their own view as to whether it's a good or a bad thing that elections look like they've been delayed again. But I think the silver lining we should take away from that is if it does enable the government to actually implement on some of these projects they've talked about for anything from 10 years to 300 years, depending on whether you talk about the canal across the Malay Peninsula, then I suspect that that's actually a net positive. Thank you very much.
Right, well, thank you. As usual, we have a microphone in the middle of the room. So anybody who wants to ask a question, get there. And let's try and keep up a fairly rapid pace of questions. George.
Yeah, a question for the panel. I'm curious why nobody has raised the issue of currency devaluation. As you probably know, Thailand is one of the only countries in the region that has not devalued the currency. And on the 16th of April, Prayut subtly pushed the Bank of Thailand to devalue, and since then the baht is at a 6-year low. So do you not agree that this could, potentially turn around the Thai economy in the same way that it seems to be doing in Europe and has done in the United States? And a quick question for Ian. I mean, you brought up the issue of bond yields and interest rate reductions. Do you not see that pushing people, forcing people into equities and being a bullish, a bullish sign for the stock market? Thank you.
All yours.
All yours. Can I answer the second question first, because that's easier? The answer in a word is yes. We do think it should push people into equities and out of bonds. One of the other houses I worked for previously was Bank of America, and their strategist was relatively famous the past couple of years. He coined the phrase great rotation out of bonds into equities. And I think that's as applicable to Thailand, if not more, than many other countries, particularly in the context of that chart I showed, that most Thai institutions are extremely heavily invested in bonds. I think they have to rotate some of that money into equities. I think they're starting to do it, but I think it continues for foreseeable future, and I think, yes, it is bullish for equities. In terms of the currency, I'm not a qualified economist, but so I'm definitely less qualified than most people on the panel to talk about this subject. But as a house, we thought that actually the currency would devalue this year and next to a degree. We were forecasting the currency would go to 34 to the US dollar by the end of this year and 35 to the US dollar by the end of next year as a result of both two things. One, partly a dollar story, that the dollar strengthening, and also partly for exactly the point you mentioned, because other countries in ASEAN had already devalued their currency, and to the extent there is a game of playing catch up with that. Hopefully, yes, it will have some impact in terms of the exporters. The challenge for Thailand, though, is not just the price of exports. The challenge is where we're sending our exports to. If you look at the mix, more than 60% of Thai exports actually go into Asia. And one of the biggest markets for Thailand clearly is China, as it's become for many countries. If you were to break down Thai exports by country last year, Thai exports to America, Thai exports to Europe actually did relatively well. The problem for us was exports into China. And so I expect that there's only so much that currency devaluation will do if demand in China continues to be very weak. And therefore, that reason, we're not particularly reliant on exports as a major engine of growth. We're assuming it's I think between 0 and 1%. That's all.
It's already
I think sorry, can I add on that a little bit? Because I think that on the point of currency devaluation, I see currency devaluation more like a short-term measures that would address the long-term and structural problem that Thai export should be addressed. I think the analogy would be that you have a cancer somewhere and then you have a headache and then you take Panadol to help with your headache, but then you don't cure the cancer. And I think that Thai export needs to be looked at seriously in terms of the export competitiveness of Thailand compared to other countries. Part of the reason that our export is not picking up in the area is because of the global value chain of the industry, and that means that a lot of export goes to the same companies. And if companies are not investing in Thailand because they relocate to other countries, that also means that some export sector of sectors like automobile or electronics would also drop. So I think that in addition to what you already say, that it would help, but I also think that we should be seriously looking at the long-term export competitiveness, and I think that would be an issue that would come up more and more in near future. Yeah.
Question?
Hi, Jerome Taylor from the AFP News Agency. Can I ask the panelists what their views are on inequality in Thailand in particular? One of the things that stuck out to me last year, I was looking at the Thailand State Economic Planning Agency figures, and its own planning agency says that 0.1% of Thais own nearly half of the country's assets. If you compare that to America, that's about 0.1% of Americans own about a fifth of the country's assets. This is one of the most unequal countries in the entire world. First question, is that good for business? Second question, is that good for the Thai people? Any of your views would be appreciated.
I made the point when I talked about inequity and inequality. There is, when we look across countries, global empirical evidence that inequality hurts economic growth in the long term. So inequality can be measured in a number of ways. Often it's measured with respect to flows, so that means income or consumption, and not by assets. So even if you measure it in income and consumption terms, the so-called Gini coefficient, which is a measure of inequality, is very high in Thailand. It's around 48%, came down from 51 to 48% for income and around 39% for consumption, which is roughly, it's among the higher ones in the world. And the good thing is it's come down a little bit, but fundamentally it's very high. And that inequality in Thailand has a lot to do with geographic inequality and the differences between Bangkok and the rest of the country. In addition to that difference between Bangkok and the rest of the country, there is a difference in north-south. And many of you know that better, but the point is that it's not a question of belief or values, it goes beyond that. There is empirical evidence it actually hurts economic growth. So if you have more equity to a certain degree, it will actually improve economic growth. And that's why things like equality of opportunities in education in particular are extremely important, as is an effective taxation system. These are two things. There are various other dimensions. Now, in terms of the assets, I do think assets in all countries and the distribution of assets in all countries is a hugely political issue. And it is in this country as well. And it has to do with land, but it also has to do with company wealth and various other forms of wealth. Taxation can deal with this to some degree, but one obvious reason why certain groups have resisted the inheritance tax is exactly that. And yes, in a not in economic sense, but in a sense of giving people a sense that they can take part in economic gains over the long term and build ownership and take initiative, develop opportunities. It helps a lot if people have a sense that they have a fair chance. And if people lose the sense that they have a fair chance in the stakes in the fruits of success, it will deter initiative in the long run. So ultimately, there's evidence that this type of inequality is bad. And it will help Thailand to take policy measures, including through taxation, but not limited to taxation, to reduce this inequality.
Just to voice Ulrich, is that I think the rich get richer all over the world, and I think that's a non-issue. Okay, I think more worrying for Thailand is the unequal in terms of opportunity. In the past, we've been too Bangkok-centric. The best schools in Bangkok, best hospitals in Bangkok. That needs to change. Kids from the provinces shouldn't need to come into Bangkok to go to the top university. We should have top universities throughout the country. We should have top hospitals throughout the country. I think that's more of an issue in terms of opportunity. I don't think today's taxi drivers don't mind working hard and become taxi drivers as long as they think their kids has an equal opportunity as kids in Bangkok to become lawyers and professors.
Sorry. Question.
Yeah, Chris Bruton, Data Consult. Turning this question into a little bit of a personal story, I've been in Thailand for about 47 years, coming up from Singapore and Malaysia. When I came here, I thought, well, Thailand has got lots of resources and Singapore doesn't, and there's tremendous opportunities here, and we've heard the word opportunity quite often. Well, looking back over that nearly 50 years, if you look at those statistics, like Kunpavida likes to do, you'll see that Singapore has progressed massively despite its lack of resources, and Thailand really hasn't. What about the next 50 years? I have actually grandchildren who have the option of being Singaporeans or Thai. Which should they choose? Where should they be? Should they invest in Thailand for the next 50 years, or should they invest in Singapore, and why? And what could change the progress of Thailand so it could be having the kind of growth over the next 50 years that Singapore has had over the past 50 years?
That's a no-brainer for me. I take being a Thai over being a Singaporean any day.
You know, 60 years ago, the World Bank looked at the comparisons between countries, and at that time we made a prediction that what's today Myanmar, then was Burma, would have the highest chances and the best chances among all of Southeast Asia and Japan to grow the fastest. And Japan would be forever doomed to poverty. You can read that in a World Bank report 60 years ago. So it shows you the risks of this type of projection, how wrong, how terribly wrong we can get it. We can all talk about the reasons, but I'll just mention two other things. One is that Singapore is a very special case. It's a unique case. Everybody looks bad when you compare them to Singapore, including my own country. And Singapore is a city-state. And it has had, for all the questions you can have about personal liberties and all those things, it has had, in terms of economic policy, an enlightened leader for a very long time. And very few countries are blessed with that. And the last thing I want to say is that, and you should talk more about this, but when you make choices where to invest, you don't invest at a high price when a country is already right on top. You invest in those assets, when you're in the bottom, and look for growth. And I think the opportunity is here. And remember, I'm the optimist.
Also, I think going forward over the next 10, 20 years, you're going to see investment borders blurring. I don't think investors in the future or asset allocators are going to allocate their investment according to countries. They're going to go according to the best businesses, best companies, and that may happen to be in Thailand, and some of that may be in Singapore. I don't think it's a case of one country versus another.
But also, just following on, do you think you should even be comparing Singapore? You say it's a freak. I mean, it's like, but I mean, for example, Singapore has
I did not say freak.
You didn't use the word, but it has no farmers. It has no real people. The people that we're talking about. They're all value-added personalities. They're in finance or assembly of electronics. But the core people that have been up in the streets of Bangkok, the red shirts, are not those sorts of people. They're ordinary people who live up country. Should we make these comparisons? Are they valid? I mean, I was very struck by your charts.
I think that we can learn from what Singapore has done, because Thailand, as Ian has mentioned, that has been driven by export and inward FDI for the past 10 years. And our export are mainly focused on low value added. Take rubber. We still export rubber sheet, whereas Malaysia and Singapore are doing medical equipment and medical glove and all those. Those are the kind of the lesson that I think we should take of how we could add value to the things we do, either export or even service. I think we all have experience of how service in Thailand is great, but it could be better if we put in more technology, R&D, or innovation. And those things, I think, cannot be taken away from the success of Singapore, of what can be done. But we are blessed with a lot more resources, but then it brings in more issues that we need to deal with. So I think to answer your question, I agree with Jeep that, I would not compare Singapore to Thailand. I'd be here any day. But looking at the lessons that Thailand can learn from Singapore, I think that there are many lessons on business development and on economic development that we should not overlook, despite it being just a state city. Yeah.
And if I could add just a couple of points on that. The first point is the fact that we can't assume that what we see today is clearly what the world's going to look like tomorrow. As your analogy clearly illustrated, the world looked very different 47 years ago, and it will probably look very different again in another 47 years' time. I think Thailand is at one of those points where it's got some very big choices to make over the next 5-10 years or so. And I think it's really difficult at this point to exactly predict which direction it's going to go. But there is an opportunity to make some good choices. Again, to investing in infrastructure, to enable more job creation in the provinces, to boost people's income, and lead to growing a middle class and urbanization, all the things you've seen in many other developing countries. Secondly, as chaotic and depressing at times as politics has been in Thailand over the past 10 years, the one thing I take away from it is that clearly a lot of people, both in Bangkok and upcountry, care about politics. Now, they don't necessarily agree on what the right path forward is, but the fact they care, for me, is actually quite encouraging. And I think this degree of blind faith that it doesn't matter what politicians and policymakers do, I think that people have been shaken out of that, and I think they do care, and I think over time they will hold their leaders to account, and that increases for me the probability that whether they like it or not, ultimately they'll make better choices in the future maybe than they've made in the past.
Just before I come to you, just following on from that, the idea that you have a military government or a government that can make these big navigational changes, opportunities, as you say. You look at taxation. You look back to the Prem governments. They failed to bring in VAT. It was something that was affected in '91 under a military appointed government. They just made the decision. They did it. It was a very good decision long term. In Thailand, we now have inheritance tax and land tax, which gets back to this whole issue of inequality. We also have one of the top 5 income disparities in the world. It's dismaying, is it not, that something like that tactical decision has been done? And I'm speaking specifically about the taxes. Ulrich, what would you say about that?
You keep coming back to the politics and to the form of government. I want to echo what a couple of other of my co-panelists said. The success, if you will, or the likelihood of effective policies and effective policy reforms is invariant with respect to the form of government.
Right.
It doesn't matter for that particular purpose. It doesn't matter whether Thailand has a military government or not. It doesn't matter whether a country like China or Vietnam or Laos or Cambodia or Chile, when under Pinochet, is a dictatorship or a democracy. It doesn't matter. Really, it doesn't matter. You can have excellent policies, excellent reforms. You can seize opportunities on education agendas, health agenda, infrastructure investments as a democracy, and you can terribly fail to do that. And the same can be true if you have a military government. And there are examples of both all around the world. And the examples, I think I remember that chart that was shown, that in Thailand, you know, you have had great performance during both types of governments, and you have really awful performance also during both types of government. It simply doesn't matter. And we need to get this out of our head, that economic performance and policy performance is linked to the form of government. It is not. This is a wrong idea, and I want to debunk it squarely, okay? And instead, I want to encourage you to focus on the merit of the actual reform, what's actually important to do, which is these infrastructure investments in a clean and clear and productive fashion, the right kinds of investments screened the right way, implemented, bankable, with private sector participation and leadership, not just only with the public sector, in a very effective way, in water, in transport, in energy, across, and that also requires a proper regulation, plus the corresponding education investments. That's the way to go. That's what Thailand can do, I believe. And it's nothing to do whether it's the current government or another one.
So are the right decisions being made?
That's for my Thai colleagues to answer.
So are the right decisions being made? I mean, are these things coming through?
Well, I think progress has been slower to some, but I think the intention is certainly there.
Yeah.
I think expectation. One thing that this government didn't do so well was managing expectation. I think after May 22nd last year, when the military took power, I think it had one of the highest poll rating ever anywhere. And I think one thing they failed to do was manage expectation, because they came in, people expect them to implement reform. And reform and growth doesn't necessarily go hand in hand. Thailand is clearly now suffering from an overhang of a succession of populist policies implemented by past governments. And that overhang takes time to weed out, and that needs to be addressed by the government. They should not be promising growth. And reform takes time. You cannot probably see reform taking place in less than 12 months. I think that's totally unrealistic. Reform is a process, it's not a goal. And it probably takes decades to fully implement the reform that Thailand actually needs. So I think we're on the right path. We'll eventually get there. Like Kunut says, we'll probably muddle through somewhat, but I'm fully confident and optimistic that we'll get there. And I think the many of the right decisions you've asked whether it's being made or not, I think those decisions are actually being made for us. We don't have a choice but to roll out infrastructural projects, whether it's road, rails, in order to capture the opportunity that's been given to us now. All we have to do is execute. It's not a question of choice or decision making. Those decisions are already being made. China wants to push it. Our neighboring countries, it's clear that with our central location within the mainland Southeast Asia, all we need to do is to increase and enhance connectivity. And that's it. Voila, we've solved our dual track problem. Very straightforward.
I may beg to differ a little bit.
You certainly may.
You asked if the right decisions are being made. That I would not like to answer that directly, but I think that when we look at how a country should be managed and how we should instill the system and institution that is needed for future growth, and even without looking at the index, we would hope that as country further develop, we would have stronger institution that runs by itself without having to be concerned what kind of people are in that institution. And I think that a system that would allow institution to grow and mature takes time, I agree. But I don't think that a top-down kind of decision would be compatible with the system and the strengthening of the institution we would need for the future. And that goes for all the institution that is required for political as well as for economic development. So I think that when we look at the country at the moment, we see a different type of coup, that is the military are running the country directly in economic ministries as well as in the government. And yes, some decisions are clear that we need connectivity and all that, but I think that Thailand also need a more coherent and a more holistic perspective on everything from how we develop the industry so that our business would be competitive, SME would be competitive, and that leads to export competitiveness and Thailand's competitiveness in the world. And that perhaps needs a more broader perspective that is not just implementing only of what needs to be done of the day's decision.
But I think that's one of the problems. I think one of the problems is that we've always identified our growth with export competitiveness. It's not just all about export. No. Not every country can grow their exports. In fact, you can argue that part of the problem that Thailand is in today is because we've been too reliant on export for the past 2 decades. 80%, 75-80% of GDP, it's just too imbalanced.
It's not just export only, but if you look at the competitiveness of Thai business in general, even we see that Thai firms are becoming more active overseas. But if we look at the neighbor, we are still very small players compared to other emerging markets in the region. Even Malaysia has higher number of firms that are active overseas, and the Boston Consulting Group does this report called Global Challenger, And okay, I will not compare to Singapore, but Malaysia have at least 13 companies listed in that group, whereas Thailand has 4. And those are the big 4 that we already know: the CP Group, Indorama Group, TUF, and PTT. So I think it's not only for export, but I think for overall economy to be competitive, we need to be able to sustain the level of competitiveness that is comparable in the region.
If I may take a second bite of the apple, I apologize, and I'll keep it brief. We are the World Bank Group. We are an unabashedly, unashamedly globalist power. And we believe in the value of global integration and global trade, and in the power of trade and integration to promote growth and economic well-being for those who participate in it. And I believe that holds true for Thailand. I think in particular when you look at ASEAN, there's a huge opportunity. It's a challenge. It's going to be really difficult for ASEAN over the next 5 or 10 years to realize that potential, but there is that enormous potential. And it will only come through continued opening liberalization, not just of goods, but also especially of services and some of the things that I've talked about, labor markets, all these different dimensions of economic integration. So, and Thailand, 60 million people, Thailand is a mid-sized economy globally, and over the medium term, the opportunities are there. They are with Thai firms abroad, they are with exports abroad, especially also of services growing, and we believe in that. It's not only about that, but if Thailand were going to basically contain and live only by itself, I think Thailand, that is a recipe for disaster. You only have to look next door what happened in Myanmar through 3 decades of isolation. There are some other examples. And those countries who have tried that to really grow through autarky and basically forget the rest, look at their record. Not very good. So I think on that question, I have a strong view. And I think the way is toward increasing integration and making that possible.
Right, you've been patient. Question? Quickly.
It's because I come from Hua Hin, so that's why it's school place. Achan, to you, as a Thai, I think you can talk. It's a little bit related to politics plus development. When you said Singapore has 18% growth in exports and we have very little as there. Why? What happened? If you were the advisor to Mom Ui and you tell him, why, where have we gone wrong? Is it our labor unqualified, unskilled, or our labor is overpaid for that? And extension of that is, what is going on in the assembly. I'm really ashamed that even with the selected people in the NLA, we could not pass the inheritance tax. When the very famous name is sitting here, and this has been in the parliament for 20 years when we are talking about reducing the gap between the rich and the poor. So how we can reduce the gap? Even unelected politicians cannot handle this. Second one, Ian, short one to you. In UBS,
right, let's cut the quarterly results, Singapore, Thailand. Does that actually tell us anything? It's a quarter.
I just want to answer briefly. You're from Hua Hin, right? I just ran Hua Hin half marathon.
I know you broke the record, 21 kilometers.
Great hills there. But just one short question. I think value added is my answer. We are focusing. For example, take a shawl from an OTOP village that sells a nice cotton shawl for 300 baht. We love it because we can buy tons. But then take Jim Thompson that sells the same thing for 15,000 baht. Just because Jim Thompson has brand, has invested in the marketing, has invested in R&D to come up with better design that would suit international demands. That is already the amount of 2 things being sold that can already expand the export revenue. So I think we need to focus more on not just the high end of the digital economy. We have to look at everything of how we can add value to our export. I grew up reciting that Thailand export rice, rubber as the main commodities. Students today, or my daughter today, still grow up reciting that we sell rice and rubber. And every year we are faced with the commodity price swing, because there is no way that we can go against the global commodity price. And we still ask ourselves what would be the best way to subsidize rice farming. And even this current government has come up with some form of subsidies for rice farming, whereas we should be looking at better irrigation, value added for rice product and all that. So one answer, value added. Thank you.
Right, Marwan.
Ian, can I ask?
Okay, but be quick.
Okay,
Quickly.
yes.
We want quick questions.
Ian, okay, one question to USB. You only mentioned about the securities. I think USB is also very good in finding tax havens for the policies makers.
UBS.
That you are a matchmaker of finding the tax haven for the policy makers of Thailand. Is it true or not, including one former prime minister?
I assure you that is so far above my pay grade, I wouldn't even know. I apologize, I can't answer
Right,
that.
Marwan, come on.
Yeah, Marwan Marker of the Edge Review. The assumption in the panel was somehow Thai companies had a good streak and they are stuck and they need to push the economy forward. But actually, what I have not heard here is the substantial contribution made by Japanese investment since the 80s. I mean, basically, if the Japanese were not here, Thailand will not be where it is today. Thailand's success was it created an enabling environment, and Japanese investment flowed. I mean, if you look at the most profitable companies in Thailand, the top 1,000, the finance ministry estimates based on income. The top 3 companies may be Thai, but the 50% of them are Japanese companies. So it has nothing to do with Thai companies here. And I'm somehow surprised that you're not giving credit for the Japanese choosing Thailand. And Thailand had a very lucky streak because of the Plaza Accords of the 80s. There were no competitors and they brought their investments here. But now Japanese companies are investing in Vietnam, in Indonesia, in other countries, and Thailand is losing. So somehow, it's not Thai companies that are failing, but you need to realize that maybe there is more competition and Thailand's luck may have run out.
Okay. Yes, certainly Japan deserves credit, and I'm not saying that Thailand benefit by Thai companies only. Japanese investors are the largest investors since post-60s, and the largest industry is certainly what you pointed out, which is automotive. But what we also need is to develop the strong Thai firms as suppliers. Because if you look at the industry that Japanese have invested in, most of them will also be Japanese suppliers to those firms, which is good. If they locate in Thailand, that is good for Thailand. But what you point out exactly is that when they find other location that they should relocate to, without the strong supplier base and linkages that would lead to the development of the whole supply chain in Thailand, that would not be sustainable. And that's what I mean, that when we look at Thai firms, I did not mention all the foreign multinational that has contributed, but I mean specifically that we also need a strong supplier base here. Yes.
Do you feel that there's a kind of complacency in Thailand, that they just imagine that it'll keep going and that they can sort of muck around in any way that they like?
I mean, the one thing in answer to that and the previous question,
because they're related, obviously.
The one thing I'd say is that when we meet policymakers at the NESDB, even at people within government, I would say that we don't think there's complacency.
Right.
And in fact, the statements they make are exactly the things we're asking them to do. The reason why they changed the BOI tax privileges last year, it's one of the biggest single changes they've made on BOI privileges for a long time. Until the end of last year, tax privileges for inward investors in Thailand were simply based on geography. And people went to Rayong because it was in Zone 2 and it was close. And the net effect between tax and geography was such it was the most attractive place to manufacture. Going forward, it's not based on geography, it's based on industry. And it's exactly based on value add. And they're saying that we will give you tax privileges if you come to Thailand, if you do something to actually improve the value add of what Thailand's producing. Second point, one of the reasons why Thailand is investing so much in infrastructure is because we accept the fact that we are going to lose competitiveness over time to emerging markets. We're going to lose competitiveness to Vietnam, to Indonesia, to Cambodia, Myanmar, just simply because they're investing in infrastructure and their workers are becoming more productive and the supply chain is developing. As of today, when you read any of the Japanese surveys on where they invest across ASEAN, Thailand is still coming out as the #1 investment destination in ASEAN, and as it has done for a very long time, simply because Thailand has better infrastructure and a deeper supply chain. That will change. As a result, what Thailand is doing is investing in the infrastructure to connect these different centers of production. So you have production of some components in Myanmar, some in Cambodia, maybe some in Vietnam. But if you improve the logistic network, you can bring those components together and still assemble them into a finished product in Thailand, maybe, as one of the choices. But I think that's exactly the type of thing you'd want them to do. So I don't think it's necessarily, I mean, just literally my personal view, I don't think it's that they don't understand what needs to be done, and I don't think it's complacency. The problem is we've come off 10 years when policy execution has been very poor. They know what they need to do, they just haven't been able to do it.
Yeah. One word to add. I agree. I want to come back to the point that you made before, saying, okay, it's all very obvious, we'll just have to invest in the infrastructure. There's no choice, we'll do it anyway. It's going to be very clear. Yes, it's clear. But this, I think, where there is a risk of complacency, and we should advise to resist it. Good infrastructure investments are not easy. What is clear, they have to be made, the water, the transport, the energy, all those investments. What is actually very difficult to do is to do them cleanly, clearly, focused, well-screened, with the proper type of making bankable products where the projects where the private sector can invest in. As an example, people have been trying to do public-private infrastructure projects for a long time all across the region. Indonesia had like a long list of prioritized infrastructure projects, PPPs, for 20, 25 years. I think if you count them, the ones that have been done, it's like a couple. Yeah. And it's across the region, it's the same. It is very difficult to do, objectively very difficult to do. So it's not an easy thing, and it won't happen because we say that there is this opportunity and it's important to do it. It will only happen with good policies and persistence and good regulation and with the right kind of financing from the right kind of parties.
Yeah, and of course they're going gangbusters on PPP in the Philippines at the moment. We've run for 2 hours and I don't want to keep you past your bedtimes, but what I would like to do is just go through the panel and ask you each to answer 2 questions. One, look back over the year, what would you pick out and say that's been done well? And then I want you to play God and look forward and say the one thing that needs to be done in the coming 6 months or whatever time.
It's very obvious that
Good.
On the highlight of the past 12 months, I thought the coup was very well executed. You know, it brought stability to society, it brought stability to the economy. It gave us a government that the budget could move forward, the economy moved forward. In many parts of the Thai society, you know, that the coup, last coup was known as a thank God coup. Right. So that was very well done. But clearly the caveat is in how do we return to democracy, not just to have election, but sustainable democracy where elected governments are held accountable. And that answer is above my pay grade, and I don't have any insights.
Pavita.
I would dare not to touch on all those broad issues, but just specifically on economic and business. I think one thing that was well done is that spotting that corruption has been the main problem in Thailand, and that the need to tackle corruption is something that I think deserve to be agreed with, and that we applaud it. Okay. And so setting up the super board to look at how state-owned enterprise could be reformed and be better run. So that's one thing I think I would agree. And what needs to be done in the next 6 months or a year ahead, I think that to make sure that policy that has been announced is also follow up, means that you have to follow up on issues that are difficult. If you announce tax reform because you think that inequality has caused political instability, I think you need to make sure that tax reform does go ahead, and the inheritance tax or other tax that would lead to equality would be implemented.
I agree with the SOE, the super board, and with the BOI in terms of some specifics, the investment board incentives, the changes, some specifics that were done well. I think in terms of things to be done, the single biggest thing to me remains developing and beginning to implement meaningful education reform. The second biggest thing is the tax reform. And then there is the third thing, which is a little more topical. I wish Thailand success in the meeting on the 29th, I believe, and in finding a way forward through cooperation within the ASEAN community, where Myanmar is a member, Malaysia is a member, Indonesia is a member, Thailand is a member, to deal effectively with the issue of what's happening on the open seas with the Rohingya and with the fishing boats and everything that's connected with it. This is not a Thai problem, is, if you will, not a Myanmar problem or a Malaysian problem, it's an Indonesian problem. It's a problem for the region, and we in Europe have our own problem that's exactly the same in the Mediterranean. This is a global issue, and it requires collective action. And I want to give the Thai government credit for calling this meeting, and I wish Thailand success, and I do hope it will get sorted out for the better of those people and for the best of the region.
In terms of what they've done well over the past year, I think stopping the fighting was their biggest single achievement.
Same on them.
Yeah. And looking forward, I think there's two things I think they need to do. One, in terms of actually execution on infrastructure, and two, calibrating the relationship between China and America and getting that right.
Good. Well, look, thank you very much. Maybe in 6 months' time I'll drag you all back and we'll have another debate. But in the meantime, Ulrich, Jeet, Pavita and Ian.
Thank you.